Hi guys, I wanted to record a video today of how is it possible, even if you are in a anywhere up to 1 to 7 or 1 to 8 a risk reward trade to still end up breaking even, and why this is the essence of our strategy, and why we're not trying to guess direction and pick a bottom or a top. Today I'll walk you through two trades which I took in this afternoon session. So this was just 4 minutes after the market opened, um, and this would actually show you why this strategy might be suitable for you, or it might not be the right thing for you. So uh, first things first, this was where I took my long trade, and I've enabled my risk-free mode, so the price actually reached the first target, and I've taken half of the profits, and I was running a risk-free trade from this point onward. So here I was basically stopped out at a break-even place. The price actually went higher, then went down, and stopped me out. And this was a break-even trade. The second trade I took was even more interesting. So this was again a long Dow trade. I took this trade here. We had our break-even trade at 38,172. In other words, when the price reached this level and took 50% of my order, I would be running a risk-free trade. This happened literally 1 minute later, and the price was hesitating for a little while here. Then we saw a breakout, and then the price actually continued higher. What happened next was, this is where I took the trades, and you can see the price went all the way up to this next resistance level, or micro supply zone, and then it basically reversed from here. So I saw the reversal. I didn't take my profits here, and the main reason is because sometimes when you're actually trying to take profits, and you're staying in front of the trades, you're actually not allowing this trade to run and to go to its full potential. So let's say we took the trade here. This was a long trade. Then the trade is going through this next supply zone, and even though this was a micro zone, sometimes the price might reverse off a micro supply zone. Doesn't really matter. So what happened is the price reversed here. It went all the way down, and it stopped me out at a break even level. And the reason why I don't really care is because usually 1 out of 5 trades like that would end up being a very profitable trade, meaning in many occasions it may well go over 1 to 10 a risk to reward ratio, or being in a double digit returning mode. The other 4 times I might end up with, let's say 3 times I would end up with a break even trade. uh, one time would be a losing trades. 3 times will be a break-even trade, and then one time we will have a double-digit returning trade, which means all the sense in the world for me to actually let these trades run and then try not to make any assumptions if we will see a breakout, if we won't see a breakout, if this will be a reversal. I could have very easily taken the other side of the trade when I saw that the trade was reversing. Here I actually even had a signal that I can take a short trade. But this is not the essence of it. Once you're in a trade, which is a break-even trade, this is all you want to score. So you want to score as many break-even trades, as humanly possible, and then out of those trades, you will be running based on our strategy. This would be anywhere from 2 to 6 trades, double-digit trades per month. But depending on your strategy, this might be I don't know. There might be more or less. What you're trying to achieve with this type of trading, or being in a risk-free mode, it basically allows you to not take any direction, and to be able um, to let the market decide if this is a good opportunity or not. Because in all honesty, it's close to impossible for anyone to to predict market turning points. And in my opinion, it is completely impossible and irrelevant over the long term to be able to pick market turning points and to do this consistently with precision. So that's why your goal should be to minimize your risk as early as possible and as quickly as possible. With our strategy, this usually happens in the first 1 to 3 minutes of taking a trade, and after that, after you've done your initial job, just let the trade run. Let the trade decide if this would be a breakout trade, a reversal trade, if you will be stopped out at a break even. Your most important thing is to be able to have a sturdy system that allows you to find those low risk, high potential for returns trading opportunities, and then position yourself in a risk-free trade. So once you do all of those couple of things, then you should the only other thing you should be doing is to let the market decide if you're in a situation like that, if this would be a breakout trade, or as was the case here, a reversal trade, in which you will be stopped out at break even. Again, it is very important that this element of the strategy, which is the break-even or risk-free mode, is enabled. If you, on the other hand, were running a trade from here and you didn't take partial profits, you were not running a risk-free trade, in other words, then at all points of time you will be questioning yourself, is it a good time to take profits? Maybe you would take some profits somewhere here, or maybe you would close your trade here, or maybe you would wait for the price to reverse all the way down in a panic mode, and you will be stopped out for a loss. So either one of those scenarios is actually not healthy for yourself as an individual, and also for your trading results. And because imagine if, let's say, you take 5 of those trades, then on many occasions you might actually exit the trades in a very unfavorable place. Let's say the price went down to this level, but then from here the price made a breakout. I've seen this so many times, guys, you can imagine, or the price even going back to the entry level and only then reversing. This could actually, if you were trading in the old school way of using a stop loss, not taking any profits along the way, and then waiting for the price to actually stop you out or reverse and then take profits, you would not be able to sustain this type of trading, and it would only harm your P&L. So with all being said, I think the only takeaway from this video and many of the other videos I'm making should be the risk-free approach to trading. There is nothing completely risk-free, of course. There will be a fraction of those trades that we are taking in the trading room as well that are being stopped stopped out straight away or very quickly after taking the trade. I would say maybe around 20-25% of the trades that I'm taking are being stopped out straight away after taking the trade. But the other 80%, you can see what happens with the rest. So once you enable your risk-free mode, you're able to run some of those trades for very high returns, as high as over 1 to 50 risk-reward ratio. Our best trade for last year was a trade that returned 1 to 55, and this month, as you've already seen the videos, we've had plenty of double-digit returning trades. I just don't want to become too repetitive, but that's the essence of good trading for me, and this is what has worked for me. I hope this video has been somehow educational, guys. If you have any questions or comments, and please don't forget to subscribe. This could actually bring all of my videos straight to your inboxes as soon as I make them. See you in the next video, guys. Bye.